So the next piece in the time factors in the stock market book by George Bayer, after he gets done talking about the circle diagram and the domain of the Sun, Jupiter, and Saturn, he moves to discussing a table where he shows his biblical circle of 368 degrees, 10 minutes, 48 seconds. He mentions the unit again of time times and half a time to be 35. So he's looking at one time 35, twice is 70, half of that 17 and a half. The total of which is 122 and a half, or roughly 122 degrees and change in the circle. So the total of 122 and a half is a key number, and so are the other three numbers given. He's showing us three octaves involving the base unit of 35, the octave above and the octave below. So he's got the octave below is 17 and a half, doubling that gives you 35, doubling again gives you the key biblical number of 70. He then proceeds to give a table on page 70 here in the book, in this particular copy anyway. So he takes the number of 35 and divides it down by eighth increments, and he comes up with this series of numbers, and he includes the 70 and the 122 and a half along with that. But for the numbers below 30, he goes down to the 35 eighths, 26 and a quarter, 21 and 7 eighths, all the way down to 4 and 3 eighths. So this was written back in the 1930s, and he's referring to low price stocks that are selling under $50 to $100 for the most part, and all commodities at the time were as well. But now when we're going to take this number set and apply this to some of these higher price trading vehicles that we have today, we have to extrapolate these numbers. We've got to increase them. And we can do this by floating the decimal and adding zeros to that. So if we're looking at something like Bitcoin, we're going to be looking at numbers in the thousands or increments of 1,000. So in this case, we're going to be looking at, instead of 35, we're going to be looking at 3,500, 35,000 even for the 122. That could be 122 and a half, could be 1225. It could be 12,250. It could be 122,500, which we had hit and bounced off near the all-time high. So what I'm going to do here is show a table of building these numbers out and how you would want to look at doing this to work with these numbers. In column 8 here of this Excel sheet, we've got the Bayer set starting with 122 and a half. Then the next number given was 70. Then the 35. And then the half of that was 17 and a half, and the half of that was 8.75. And then he gave us the other in-between numbers. Now you can look at that and use those numbers. But when I take a look at Bitcoin here, I'm just going to use the main numbers and add the zeros and make those bigger numbers. But let's say if you wanted to use the number 70, and you can do this with any of these numbers, you just want to make variations of these numbers by floating the decimal and using those harmonics of that number, where 70 could be 700, 7,000, or 70,000. Or we could even look to the small side, make that 7.7, 0.07, or 0.007. They are still the same number 7. And then the primary octave, which I just pointed out in the table, is the 70, 35, 17 and a half, 8 and 3/4, 4 and 3/8. All we're doing is taking each number and dividing it by 2 to get the next lower octave. Okay, you can also double the 70 and look at 140. So when Bitcoin rallies and takes out the all-time high, obviously 140,000 would be an important number for that. So I'm going to go to the Bitcoin chart and lay some levels out. Now, George mentioned that he's using these as range measurements, and he says certain range measurements will repeat and turn the market or reverse the market. Other of these range measurements will just generate retracement type of moves. So you have to really look at each market to come up with what the most important ranges are and what the minor ranges would be, which would just cause the market to go into a little bit of a retracement mode when those ranges are hit. But when I look at Bitcoin now, I'm really only going to look at increments of 7,000, 3,500, and 1,750. And then we'll take a look at a few ranges of those numbers as well. So I'm just going to look at those, first of all, as natural price levels. What happens if we go to a weekly chart and just put some of these numbers down and see, do they have an effect just as natural levels, which they do. This is not even making any kind of projection. It's just plotting these numbers on the chart and looking at reactions. And then, of course, you can take these numbers and look at the how they react when they form into ranges. So here's a Bitcoin weekly chart. I'm just going to go back to 2017 here and start there when Bitcoin broke out and cleared the 1,000 range and got up above there and then started to build and make these bigger numbers. So here I've got the 1,750, here's the 3,500, and then I went up to the 7,000, and then 10.5, which is just 7,000 plus 3,500. Then the 14,000 level, which was just the 7,000 times 2, and then 17.5, which is just the 14,000 plus the 3,500. So you can look at that and see how those worked. You could also plot other natural numbers in there, like in the 12,000 area. You could look at 12,250, which is right about there, and you can see that these tops in early 19 and then again later in mid 2020, how those tops were formed right there at that 12,250 number. That's the 122 and a half. So you can kind of take those numbers and look at them as well. And you can see just laying those numbers on the chart gives you natural support and resistance points. And when you combine these with a timing mechanism, when price comes to one of these key numbers and you have a timer indicating a change in trend, you're going to get that reversal move that you can take a trade off of. Let's move ahead and look at the next couple of years. So once we got into 2020, after Bitcoin had built this long base, we had the breakout here of that 14,000 level, and we were in a big ripping bull market because that was in the bullish part of the Bitcoin 4-year cycle. But you can see how the market moved between these numbers at this time. Even in such a strong move, the upside peaks came at these price levels, and the reaction lows also came near these important levels. Then after this initial first top was made up in here at the just over the 63,000 range, which would be the 9 times the 7,000 number, the market traded down and we got the first big bear market after that 2021 rally, and that went back down and just missed touching here at the 28,000 level, which was 7,000 times 4. And what happens when a market comes near one of those levels and doesn't quite get there, notice how it challenged it again, couldn't quite get there again after that, and that's a good indication that that market's going to reverse back up. And we got the next big leg of that bull, and notice how we went up 3 levels to this high here, came back 1 level down to this support area at 42, which is 7,000 times 6, and then it started back up and couldn't quite get to the 70,000 key area. Notice how it fell short, and we got the next big bear leg down. Then you can see how those levels worked through that area. Notice also, like the an important area would be the 49,000 area, which would be Gann's death zone, or 17 times 70. It didn't do as much as you would have anticipated back here in 21, but in 22, after this leg completed, it came back up and became the resistance zone at that high right there. So these numbers do have a fairly good effect. Let's take a look further now and see what it looks like as we get into 23 to the current period. So again, you can see how the market bounces off these levels, also how it becomes consolidated at these levels. These natural important levels can act as gravity centers where the price will just bounce up and down around those numbers for quite a long time before it breaks up and moves to another level where it will consolidate again. And you can look at these numbers like, let me throw this one out. Here's 42,000, 7,000 times 6. And then I put the 52.5 in right here, which is where we had these 3 low points. The 52.5 is simply the 49,000, 7 times 7,000, plus 3,500. A lot of the important points in Bitcoin here will come where we have multiples of 7,000 with a plus 3,500 added to them. Here's the 70,000 level again, another important natural level. Look what happened in that area here where we had weeks of the market attempting to break through that level. It was stuck there for 6 weeks without a close above till it retraced back to this level back here, the 56,000 area, came back to 70,000 again for another 4 weeks, could not crack, went back down to that 52.5 area, back up to 70 one more time, and then the 4th time through, as Gann stated, it was the one that was the breakout move. Then it went up to 105,000, which is 35 times 3 is 105, or 35,000 times 3, 105,000. Another step up to the 112,000, which is just the 105 plus 7,000, became the next resistance point. And then coming up to the all-time high, there's that important 122.5 number where we had the initial 2 tops, and then it broke through and made the ultimate high here at 126,000, which is what? It's the 122.5 plus 3,500. It is also 126,000 divided by 7,000 equals 18. So very important area for that top to form. So now you've got that area with the natural 122.5 number and also the 7,000, which I'm just going to call that the key harmonic number of this sequence in Bitcoin, where 18 repetitions of 7,000 are the current all-time high. And then we retrace, came down, bounced around on the current levels up and down based off of those important key levels. Back down here to the 70,000 area, broke through, traded below, traded down to that important 63,000 area, which was the 7,000 times 9, which is also half a 50% retracement. So it's a key Gann retracement where we found support at the 50% level and have now started to bounce up from there. So that's the bigger picture look at just using these numbers as natural increments. But you can do so much more with this, but this is just that little introduction. Here's a look at a daily chart where I've got levels here at the 63,000, the 70, the 77, the 84, the 91, then I went up to the 105, the natural 35 times 3, then the 112 area, and then the 126,000. There's also an area here at 119, which was where this pocket of consolidation took place, right around that 119 number. But you can look at this chart and look and see how you like how the market reacted off of that. And you can also, when you get these levels, now what you want to do is take some of these timing techniques that George gave out. So you can use these time factors. So let's look at like the Sun, Mercury, Venus 40s and 70s are coming from these pivot points, and they all align at the all-time high here on October 6th of 25. So these are all the smaller planet time factors looking at a 40 and 70. I've got 122 day count to that high from this low, so that's your natural day count. Then there's a 70 day count from this high right here to the all-time high. So there are 6 projections right there that come in. And I also went and did a look back for 2 longer projections. So we had a 4 degrees of Saturn from this high, and we had a 40-degree Jupiter move from this high, pointing to the date of the all-time high. So we have, 2, 4, 6, 7, 8 time points, all based off stuff that George gave us, all came together at the day of the all-time high when it hit that 126,000 level. So I was going to do more on building out how to trade off these numbers, but I'm not. I've given enough where you can figure out what these numbers should be. Now, I would also recommend bringing in some of these other increments and looking at those and start to work with ranges, which I didn't really do here. I didn't really give many range measurements. I'm just giving them levels as natural levels. Let me just take a look at a couple of ranges before closing this out. The first one coming from the all-time high, the wave A down, the B up, the wave C down to this low is a little bit over the 63,000. Now, sometimes the wicks can be deceiving. You may want to go to the lowest close or the highest close in a nut move. But I usually don't go to the close on both sides. I'll usually just go to the close on one side. But in this case, we're coming down $63,000 in the range, right down to the 63,000 level. But a lot of times these ranges won't be exact, but they'll be close. And the wicks are going to have, a lot of times the wicks are going to have to be treated as lost motion, because you get that trading volatility at these important levels, and you get these stop runs and reversals at those areas. The first range down just a little bit over the 21,000 mark. So we had a little lost motion there, but that's a 21,000 range there basically. The next range down 17,000, or about 17.5, which is your 17.5. So that's a good range right there. Next range down about 27,000, a little over, just missed the 28,000, 4 times 7 harmonic. The move back up from this low to this high, 17,500. And the last swing down from this high to the area of this low, 35,000, with a little bit of lost motion. So you can see how these ranges are effective. You can do the smaller ranges that we have here, say the retracement ranges. You're going to get those smaller internal numbers. Like this retracement range here from this low to this high, 8,800, just over the 875 number, or 8750. So just not even $60 over that 8750 range there. So again, that's pretty close. And if you go through the chart and measure these, you can see over and over how these numbers just keep repeating themselves. And when you start to work with this and get this embedded in your psyche, where you start to look at this and use these time counts and time factors, you can find all kinds of trades just using a little bit of pattern analysis in your mix. Like, are you trading the end of a move? Are you trading the end of a wave 3C or wave 5, where you can expect a bigger move? Or are you trading into what could just be a retracement? Or better yet, you're picking up a retracement bottom for a long, or a retracement top for a short. So you always have to bring pattern analysis into whatever you're doing. But this gives you a look at George, how he gave you this really nice chapter in the time factors in the stock market book, where he basically gave you multiple timing mechanisms and a nice price mechanism. And this can be carried further, because I'm not giving out everything there is to get here in this video. There's much more to this in this book, and there's also more of this in one of George's other books, where he ties the two. He ties this method into something that can be developed out further, which I've done, which I haven't put out to the public. But if you look at the George Woolston book and take a look at the George Woolston Squaring the Circle chapter, there's much more that can be done with this, which is very predictive.